The market doesn't know what keeps you up at night. It doesn't know when you want to retire, and it doesn't know how old you are. The simple truth is, the market doesn't care. But if you care, you've tuned into the right place. You're listening to Investor Resources, bringing clarity to the confusing world of finance. Here are your hosts of Investor Resources, Don Creech and Perry Sykes.
I'm Don Creech.
And I'm Perry Sykes, and welcome to the Investor Resources Podcast.
So we're money managers and we're trend followers. And it's been interesting over the years that when we were on the radio, which preceded these podcasts, we'd occasionally get people calling in and saying, well, based on the recent headline, shouldn't we be in the recent associated investment?
Correct.
Because it's got to be a coming trend. We see that, well, we saw that specifically with EVs and the need for batteries, and that implied need for a lot of special minerals, including lithium. And so, as we were chatting before we started recording, we used to get calls saying, shouldn't we be in lithium because of all the EVs that are coming downstream?
Usually that statement was preceded by, it's got to be successful. It's got to be. You know, there's just a can't miss. Okay. check. You know, our advice was always the same. Check the price. How's the price doing? So that's the key.
The price is what matters, because there may be academic demand, there may be government push for something. But I just looked up lithium ETF, and it closed Friday from its November 21 high down. What did I say it was? 49%.
44%. It's off 44%. Not exactly a booming success.
Yeah, but demand must be increasing. And the same thing's true with basically wherever you look in technology. There's a new product of some sort. There has to be demand for this because it's going to change everything.
Correct.
And then the company that has it doesn't know what to do with it. Case in point, you're online. The odds are, I would bet they're 99-1 that you're using some sort of cloud service.
Everybody is. Everybody's got some cloud service. I mean, just from the pictures that end up on your camera, those are always all backed up online, and cloud service has become ubiquitous to computer use. Cell phone usage, you have to have that cloud storage to go with it. And you know, we didn't always have cloud storage. It's come on recently, and I was surprised to read that the first big player in the cloud storage market was none other than Big Blue, our old friend IBM. IBM got there first, and they started that service. They looked at it as a subscription service, and they were going to be able to, instead of selling everyone a piece of software that everyone had to buy, download, and install, they were going to let people subscribe and run everything online. They were way ahead of their time. They were the first people in the space. Unfortunately, they really didn't know how to define it. They didn't know how to market it, and they didn't get a lot of buy-in. So they didn't get people doing it. But they were the first ones there. So they thought this is the future, and they were right about that. They were the wrong company to bring it on.
Well, they hadn't figured out actually what the application was.
Correct.
I mean, they had a great concept and it would work. It's just that, like when they missed the PC boom, because who on earth would need a computer on their desk?
Right. No one needs that.
No one needs that. And certainly nothing they would ever carry around with them. And so they missed that. And like this, they missed the cloud service. So Bill Gates won on the PC business.
Yep.
When he created DOS and IBM tried to replicate it, that didn't work. So Bill Gates was the winner. And then when it came to the cloud service, while IBM had figured it out, but as you said, they hadn't figured out what to do with it or how to market it.
They didn't know how to bring it out. Amazon said, go ahead, Don.
Well, Amazon was as you pointed out earlier, was in the book selling business, and their primary business plan was, we are going to Uh, take the books, the big bookstore,
Right, Barnes and Noble.
Barnes
We're
and
taking
Noble.
down we're taking down Barnes and Noble. That was their big goal because they were selling books, and they had a couple of engineers looking at their own internals and their internal operations, and it was like, we're doing a lot of redundant work here. If we had some platform in place where we could just plug new programs in and let them run on existing databases that we already have, we wouldn't have to reinvent these every time somebody has a good idea here at Amazon. And it didn't take long before they said, you know what? That's a sellable service. We should market that out there and just market the space so other people can put their own stuff on it instead of like IBM trying to make everybody subscribe to their stuff. Amazon opened it up and said, we're just going to give you this, sell you the space. You can fill it up with whatever you want. Well, about the time IBM was getting out of the business and deciding it wasn't going to work, Amazon was just starting to ramp up, and the rest is history. Amazon, why, just absolutely market dominating for a decade or more before Microsoft got in too. But Amazon disappeared. I mean, IBM disappeared. So the company that got there first, put it out first, was just washed away. They didn't quite understand what they had. They didn't know how to market it, and they didn't know who to market it to. And so they missed out. So if you just follow the narrative, you would have said, well, IBM's got a head start. They're already there. They already have a system that works. It's already running. They've got to be the winner, right? Not even close. In fact, they quit.
It
They
didn't work that way, did it?
they got out of the business. They shut down and said, "Yeah, this is not profitable," and left. And that left Amazon to say, well, "Wait a minute. We think we have a real service here that we can sell." And sure enough, boy, when they ramped it up, everybody followed suit and said, "Hey, that's a good idea. We don't have to build a server farm. Amazon built that. We can just use it." And it grew and grew. But so that trend was in place. That trend was going to happen. But who looked like who should have owned it was completely left out. It absolutely missed the boat. And they said that IBM share price is up 2%, little over 2%, not even 2.5% in between 2000 and 2023. So it's just flat as a pancake. Meanwhile, Amazon's had a slightly better growth than that. Microsoft, slightly better growth than the 2% over 23 years. So they've just exploded in the same space. And now that's the big driver on Amazon profits is cloud service. Even though they dominate American retail now, the cloud service is their largest driver of income and revenue. And that's from a bookseller. That's from a bookseller being in the right place at the right time and realizing what they had and realizing how to market it. So just because you see the trend doesn't mean you can pick a winner. It's very different in application, and you need to be looking at that data that we're always talking about. Follow the data. Who's making money at this? Who's gaining market share? And if they're gaining market share, are they making money in their market share? That's the important part. That's how you really define who's winning that trend, who's going to be at the front end of that thing.
Well, if those things are true, then what you have to look for is see whether or not this particular stock, the company, is actually a
Yeah,
magnet for investors, because
that's
they
it.
may be doing lots of things right, and investors may be attracted to some other area of the market. You have to watch price, you have to watch demand. We look at a balance of power, whether money is flowing into or out of the asset.
Correct.
Is it I nickname it a magnet for money. If it's a magnet for money, investors fall in love with it and they want to buy the stock. That increases volume. Volume raises price. When there's no magnet for money that's bringing in new investors, new investor capital, price isn't going to go up. It's going to, at best, go sideways. And at worst, it's just going to fall into the doldrums. So
Correct.
ultimately, you track price. That's where you identify the trend. And you will end up knowing that if you're wrong, it will show up in the price fairly quickly. And instead of
Correct.
being committed to the story as IBM was, this doesn't make any sense, we'll close it
Correct.
down.
Yeah.
You have to adapt, and that the market's dynamic. So in this case, you should have figured out IBM wasn't going anywhere very quickly and switched to something that was. However, back in 2001 and 2, early part of 2003, nothing looked like it was working because the price trends were all down.
Everything
It
was
was
negative, sure.
it was staying with where was the magnet for investor capital. And in that time period, it actually was generally overseas. And then it switched, and the US became the dominant magnet again. And stepping back into these themes allows you to identify which ones are actually continuing in an upward direction because investors keep piling money into the arena. So we're trend followers. It works. It's academically difficult to replicate trend following processes, which is why most advisors don't want to do the work. And most academics say, well, you just buy and hold for the long term. Of course,
And
even if you
forget about, yeah.
bought Amazon back in 2000, it would have been a long time, or Microsoft, a long time before you got even after the high.
And you had long periods, even with those big winners, long periods of time where you made no money or you lost a lot of money. Amazon's had plenty of 50% drawdowns along the way. So it doesn't mean that those are, can't miss hit all the time. And it doesn't mean it's a buy and hold. It means you need to look at the data. And if whoever's leading that trend changes, you need to be ready to make that change with it, because it could be permanent. You never know. It could be IBM in 2000 missing the boat, and by 2006 closing up shop on cloud service, saying this is not going to work. But all that happened was the leader shifted. All of a sudden, IBM disappeared and Amazon was where you needed to be. You need to be ready to make that move. Follow the money, follow the leaders in that trend, and that's going to put you in the best possible place. Just don't get married to it. That doesn't mean that's going to stay either. It doesn't mean Amazon and Microsoft are going to dominate this whole sector going forward either. Someone else may come along and be very disruptive and change everything, and you need to be adaptive enough to move with that after that trend's become established. You can never go to sleep on it. That's why you said, Don, it's hard work. It takes constant vigilance and watching that trend, watching where the money's going, and trying to stay on the right side of that. More times than not, that'll put you in the right place.
So trend following does take work. It's something that anybody can do with some inexpensive software, but it's a hard work. Monitoring, having rules, and following the rules. This isn't something for sluggards where you just sit back in your recliner and you think it's all going to work out in the end. If you want more information, give us a call or send us an email. Subscribe to the podcast at the link down below. Thanks for your participation, and I think that's a wrap for today.